Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tony Seo, Head of Marketplace Regulatory Technology at Nasdaq, for an update on solutions specific to central banks. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill.
Nasdaq recently announced the launch of Nasdaq Market Surveillance and Supervision for central banks. Can you start by describing the technology solution and explain how this is relevant for central banks?
Sure. Like Nasdaq's always been a provider of critical kind of like countrywide financial market infrastructure. So we operate our own 28 exchanges. We provide technology for about 300 plus banks, brokers, other exchanges, as well as regulators globally. So providing technology for central banks is kind of like a natural extension of what we're doing. And in terms of how we see it from a solution fit, there's really kind of like two aspects that we see a really good fit. So the first really is around data collection, around the collection, cleansing, normalization, administration of really kind of like sensitive financial data, right? Especially large volumes of it. And this is something that we at Nasdaq have an extremely good track record of, and a service that we can provide for central banks. And then on top of that, once you have the data, we also have quite advanced tools to analyze, monitor, and kind of review the entire data, looking for different types of abnormal or bad behavior.
So why central banks now?
Well, we see like a lot of the trends that have hit the kind of securities markets, Nasdaq itself, are really kind of like happening in central banks, particularly around the government securities and currency marketplaces. Right, we're seeing increased activity on electronic trading platforms, electronic networks, and we're seeing a kind of I won't say an explosion, but increased activity of data that's happening, right? And the central banks need to be able to both collect and manage this data, whilst at the moment a lot of their activity is ad hoc, and this is I would say the fundamental problem that central banks have. A lot of their current kind of data analysis tools are very labor intensive, and it's very difficult for them to apply advanced techniques against it.
And that was my next question. What are some of the unique challenges that central banks are facing that the solution that this offering can support?
Yeah, definitely. Like as I said, the around data collection and kind of the manualness of what they do is, I think, one of the biggest problems that the central banks suffer. Right? You still see a lot of central banks collecting data, importing into tools such as Excel, right? And doing this really on an ad hoc manner rather than systematically, for example, which means once every day directly to the different kind of marketplaces, right? So what a lot of central banks are looking to do is essentially automate a lot of this process, right, around the data collection and cleansing. And then on top of that, like with the data, they want to be much more proactive as well, right? So they want to be proactively kind of reviewing the potential trends in the data such they can be ahead of any problems that might occur.
So Tony, are you expecting interest from any specific regions?
Well, I think the thing with central banks is that their remit and their goals kind of vary quite differently across different jurisdictions, right? And then on top of that as well, the different kind of countries will have different kind of stages in terms of their digital infrastructure, right? So, but I think where we'll find most traction will be where there are active FX markets, where there are active government securities markets, and then also where the central banks want to take a more active and proactive role in ensuring that these marketplaces operate efficiently as well as with integrity.
All right, Tony, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.